Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. Feels good to be back. Missed last week's episode. I was getting my butt kicked by some cold, flu, virus, COVID, something. I'm still at the tail end of it, and it's one of the longest kind of running sicknesses, whatever it is, that has hit me here. I am definitely feeling better today. I don't sound all that great, but I am glad to be at the end of this. There's so much to talk about. 2026, the calendar year turned, and we've just gotten hit with catalyst and headline and one after another. So let's get into it. We're going to talk about trade ideas. We're going to talk about market rotations. We're going to talk about earnings season coming up, where the opportunity is. So lots to get through. Our show is sponsored by Investors Business Daily. We've got links in the description of this episode. So once you get done watching it, check out those links, claim those discounts for IBD Market Surge and their digital subscription. Now we have to start here. This was Sunday. This was right around the futures open. We saw this video message get dropped on the Federal Reserve X account. And we basically learned that the DOJ has subpoenaed Jerome Powell. And we don't have, obviously, a lot of clarity into this situation, but what we do know is the tensions continue to escalate here between what the administration wants by the Fed to do, or essentially their thinking of interest rate policy, and what the Fed is actually doing. And so we continue to see pressure just ratchet up here. Of course, now we do have the new Fed chair that should be appointed soon, right? Any day now, we're basically going to learn who Jerome Powell's replacement is. Jerome Powell could stay on as an acting member of in the Fed, but he is, one way or the other, going to be out of here as, the chief spotlight person. But until then, we get to watch this reality show continue to play out. There were just an immense amount of press and just like a PR brigade between all the different, reserve banks, and it was quite the spectacle. But this is what markets digested on Monday. It certainly led to a negative, open and a bumpy start to the week. But generally speaking, there was no big cascade here. The situation did not spiral out of control. We also have on the geopolitical side of things tensions in Iran. And so there's a lot going on just on that big kind of macro overlay. When you zoom out from price action and earnings and AI, there's still plenty that is keeping the wall of worry sort of in place. The next big catalyst this week was really earnings season kicking off, and banks traditionally always kicking off earnings season. And they didn't really trade that well this week. So you can see it was a pretty negative start for the earnings season for the big mega center banks. We're going to look at more earnings plays here throughout the rest of this video, but it sort of set a tougher tone here to kick off the week. Now, in terms of numbers on the week, the Russell 2000, everyone's talking about it now. It's breaking out. It's leading. It's at all-time highs. Gold continues to work. Oil was up this week. But now take a look at tech, right? Take a look at the S&P and the Dow. Everything here was negative, and so were 10-year Treasury bonds. So we're seeing certainly a split market, but a broad-based market. And that's one of the themes we'll talk about here. In fact, let's look at some ratio charts. This is the Russell 2000 versus the S&P 500. So you can see we've just been in this steady decline here. This is, again, the Russell 2000 IWM denominated in the S&P 500. And you can see we are finally now starting to break out here. We're starting to see those small caps, more speculative names lead. If you take a look at emerging markets versus the S&P 500. We've talked about this, that's a terrible line, at the end of last year, but you can see we've got a nice bottoming pattern in play. And, we basically have a global rally happening across the world. And it's currently at the expense, perhaps, of large cap tech, which really hasn't done a tremendous amount wrong. It's just simply stagnating a little bit, perhaps some rotation coming out of that trade that has worked so well for so long. If we take a look here at just, again, another kind of slice, this is 4-year performance, gold, silver, S&P 500. Take a look at this. Silver up 280%, gold up 150%, SPY up 60, right? So there are plenty of other things that are working right now in the market outside of the S&P 500. And this all makes it sound like the S&P 500 has been doing poorly. It hasn't, right? It just posted 2 back-to-back strong double-digit percentage years. But it's showing now that there are other things that are starting to take the lead. And I don't know that that has to be a negative thing. It's just a different thing, right? The playbook changes a little bit. And as I posted today on social, I personally find markets a lot more interesting when the Russell 2000 is leading. There are so many more stocks to look at. There's so many more breakout and momentum and tradable opportunities for the active trader. And so I hope it can continue. But of course, we'll continue to measure this. S&P 500 this week, again, kind of down to start the week and then sort of sideways here. You can see getting a little choppy on the right-hand side. We're going to look at some more price action charts at the end of this video. Volatility, the VIX, we did get a brief spike up here. So we did get into the high teens to start off the week, but it did simmer back down. We're off the lows, we're off the highs, and we're kind of just back to like the 16, 15 area, which to me, again, is pretty healthy. Dollar index acting as a little bit of a safety haven this week. There's some uncertainty, so why not get into dollars? Same thing with treasury yields. This is notable. This move Friday, in fact, should have some alarm bells kind of going off. It seemed like on the first half of this week, we were sort of rolling over in the bond market. And now to finish the week, we got this breakout above 4.2. So this is something we're going to want to spend some time looking at next week to see if this catches even more momentum, because if rates start to aggressively reprice up as the market maybe thinks that the Fed isn't going to be cooling as fast as it originally anticipated, this could be some more of those headwinds for the market. If we take a look at sector performance this week, real estate at the top of the list. One of the headlines that I probably should have included at the start was the executive order. I don't know if it's technically an executive order of mortgage-backed securities repurchasing from Fannie and Freddie. So really trying to get the housing market unfrozen, basically trying to get those spreads to compress on the 30-year mortgages to come down and help refinances and new home owners. Consumer staples, industrials, second and third spot there. Financials, again, their opening week of earnings, and then you basically have kind of this tech-heavy or really communication services and discretionary at the bottom. So taking a look at our model here for momentum on the daily time frame, you can see that we have a pretty good, healthy mix here. You don't really have tech and some of the big heavyweights, cyclicals that you'd like, but you do have industrials, materials, energy, right? That is working right now. You have a handful in kind of our neutral state here. You really only have financials, which produced a sell signal late in the week for us. Now, on the bright side, here's market breadth, right? And this is where I say things get more interesting. We're finally zoomed out more, which next week I can show a longer view of 52-week highs, but we're finally seeing some durable expansion here in the number of stocks hitting 52-week highs. So that is good. That is constructive. It just might not mean that your favorite Mag 7 stock is going to participate as aggressively in this type of environment. So keep that in mind. One of the themes, of course. S&P 500 percentage of stocks above a 20 SMA. Again, more signs that the rally has broadened. Put to call ratio, not too much to say about it. Let's talk about Bitcoin real quick. So I've been pretty bearish on Bitcoin these past, frankly, 2 months, right? Ever since we broke, a series of levels, I have been really putting Bitcoin in the doghouse. So longer term viewers here really shouldn't be surprised by that. But on Monday of this week, I finally started to get more neutral, right? A little more tactical bullish on Bitcoin. And so I ended up taking a position, which I ended up already selling the position just because I took it as a short-term trade. But I liked the fact that we were able to hold this 90K, as I mentioned, and we eventually got the breakout and we got a nice push up. I do want to talk about that price action a little bit more, but one of the things that's happening right now is the Clarity Act. And this is where there's some tension right now. And of course, now we're learning a little bit more of just some of the nasty details of this bill and what might get passed, and the ideal bill versus the final state. And of course, the legacy banking, institution as it is really fighting to, retain power basically. And we're just seeing that this is messier, and there's actually a reasonable chance that we don't get a bill passed. And this is why markets are always sort of forward looking, is, who knew this, right? Maybe the market was starting to price some of this in this original slide here, right? This wasn't really on anyone's radar. Nobody was talking at this point about the fact that we might not get this Clarity Act, this legislation passed. And it really is a critical time for this to get passed, because if the midterms don't go in the favor of the Republicans, which in early polling looks like it's not, then you may not get this passed for, certainly just a much longer period. So look, there's still chances. There's still like a 50-50, I think, coin flip on whether or not we get legislation on this crypto. I think it's important that we do, but this is some of the things that the market is wrestling with. In terms of price action here, again, we did get that breakout over 94K. We did get as high as about 97K. I took a quick kind of cash flow, purchase on Monday, and I flipped it out already into Wednesday. I have been selling puts, so I've been, my strategy right here now is I don't want to take the spot risk into the weekend and where we currently are, but I'm willing to sell some puts in the market at these levels, because I do think the path is really just sideways to maybe a slight grind up. I wouldn't be surprised to see us retest this 100K level in the next week or two. I'm still sort of pessimistic that there's going to be sellers up there, but we shall see. Improvements in the short term, it should be noted, but I still think, generally speaking, we have some supply overhead that we have to deal with. Let's take a look at silver. This is the past 6 months up 129%. Doesn't get much better than that. Take a look at the volume that's coming in. A lot of people have been calling the top here for, I don't know, as long as I can remember. Even in gold, I have been I sadly have not participated in silver really at all, but I have been all of last year sort of pounding the table on gold, and all I got met with was, the top is in or the top is in, and you're getting these swift declines, and then support finds itself, and we're able to just kind of march higher. So silver getting close to this round $100 level in the SLV ETF, that is. And so we shall see. Again, I think it's smart to take profits. It's smart to manage risk, but calling a top blindly is uniquely difficult. This is the 50-day rolling returns of silver going back 10 years, right? So again, as good as it gets is again, in understatement. We are parabolic here. So again, profit taking is warranted, but it's a steamroller to the upside here. And you just have to be careful if you're trying to short that or fade that. I'll talk about another rotation and steamroller in its own sense. It's consumer staples. Take a look at this. Almost looks like what you'd see on like a short-term time frame, where you just have these bars stack in, where it's just, you're just basically opening at the low of the bar and then you're closing right at the high on. But this is in fact a daily time frame of consumer staples. And again, look at the volume that's coming in here. So quite a big rotation and surge into consumer staples, I think, is notable. And in terms of next week, we do have plenty of econ data to look at, some more GDP growth rates, sentiment surveys, and PCE as well. So we're going to look at some charts here. We're going to look at some different trade ideas, and then we'll call it a video. All right. So I think looking at the NASDAQ 100 is a good example of maybe some of the frustration certain invest areas of the market. The QQQ, every time it gets up to this 630 area, it's just gets its head kind of, hit over the head here, and it falls back down, and we have just a very clear line in the sand for the NASDAQ 100. Now, a couple of things to note is, one, we are entering earnings season. None of the big heavyweights, except for Netflix, which we can take a look at, is next week. So we still have another couple weeks for them to report. So we might be in a holding pattern here. The good news is, if you're a technician, the level is pretty clear, right? So the QQQ may be stalling. It might be frustrating. It may be vulnerable to a rollover. All of those things are true. The point is you don't have to participate right now. You have a pretty clear entry of 630 as a breakout, right? I mean, if the market can find its footing, resolve, and take this overhead supply out and start to lift over 630, then you have potentially a nice continuation pattern to work with. Right now, yeah, it's a pretty messy chart. There are just so many other things that are working right now. So this isn't the greatest place to be. Every time we sell off, we can't quite find follow through, but there's only so long that a market can take getting its head, kind of hit before it wants to really sort of test the downside. So the QQQ could be a big topping pattern, but of course you've got earnings that are coming up, so it's not something where you may get a directional move until you start to see some of those big earnings start to come out and some of the outlook in the capital expenditures. If we move on to some things that are working, XLE, finally, I was way too early on this. We talked about it, I don't know, probably here and in here, but it finally started to break out. It's, again, not the cleanest move. There are certainly individual components that have a clearer picture of breaking out to highs, but it's been stagnating broadly. Take a look at the dollar volume coming in. I do have a position back in here on XLE, so we'll see if it can continue, but finally getting a little bit of that rotational love. Solar is also another place. I've talked about this. It's not rip roaring to the upside, but it's grinding up. So I still maintain kind of a position here in XLE and the TAN because I do think they're both acting better, right? Let's call it. And so energy is scarce right now. Everybody needs it. And so these two spots are a place that I am fishing in. Now, if we bring our attention to, actually, we should bring our attention first to our long-term all-weather model. So our Galahad portfolio, I just updated the performance for 2025. So this is the second year in a row. We've been trading this model live now for two years, full-time live. This is the second year in a row where we did beat our benchmark, the S&P 500. So we posted a 21% return for 2025, largely driven by gold. Very proud of that because this is a longer term, lower touch, less to do portfolio. It's not active in turning over a ton of things, but we still have a pretty good amount of exposure. Probably not a whole lot has changed, quite frankly, except for just more gold exposure since the last time we looked at some of these charts. But overall, it's chugging along. Now, our momentum model has been very busy, and it is been an explosive start to 2026. We've also made a lot of platform updates behind the scenes here. So you can see, again, some of our commentary. This is from yesterday, so it hasn't been updated with today's signals. Freebie, though, for you, RMBS. This was a signal we took on Friday here. So you can see kind of the lay of the land of how, we lay everything out for subscribers to basically see, the new signals, the risk levels, and, if there's more sample, usually you can see a snapshot of its historic profitability. But if we scroll down here, I want to highlight a few stocks. I want to highlight first the space theme that we were able to capitalize on. These were all entries in the beginning to mid-December. All of these kind of fired off at the same time. And this is, again, I posted this on social here on why I really originally built Quant Rockets. It was to create some discipline and instill a process for trading the most volatile momentum stocks. So PL, for instance, is, again, a space stock that we bought here at the middle or beginning of December. It's up 140% in a month. Of course, not every stock does this. I wish it did. So, this is a really, good run. But this goes to show that having a systematic process, right, that can highlight the stock first off, it can trigger all of these pretty much within a couple of days. So PL, Rocket Lab, and ASTS all three of these basically, kind of triggered around that same time in December. They're all exploding now. There's a lot of conversation about it. It feels like, I'm seeing a lot more just posts about space in general. Again, most of these companies are all future cash flows, right? There is not high revenue or profits in these companies. They all are promising and they all are serving a niche. But just remember that, the pendulum can turn quickly on these things. So you need to be able to risk manage them. You need to be able to take profits into strength. I would say that nothing is new here in these trends. I'm highlighting them mostly because they're starting to get loud. And so it seems like we are getting into some explosive kind of maybe blow off or peak momentum before some type of pullback here in lots of these space stocks. But it is notable here that all of them have really surged to start the year. I want to highlight two more actionable names that are more reasonable. RMBS, which we talked about. This was a new signal for us today. So I do have a position in this, full disclosure. And so this is semiconductor. Semiconductors are starting to, really heat up again. And you can see, this is much more tame. It's gone sideways for 3 months. It's starting to put its, get its act together. It was up 5% today. If it can start to clear above 112, then we'll start to hit the breakout lists and off we go. So RMBS, I think, is interesting. And then NXT. I also think this is interesting. And again, I do own it. This fits the solar play that we talked about earlier as well. So I like solar as a theme. I like Next Power as an individual stock. This is the weekly chart. Again, it's been chugging sideways here for a couple of months. We'll see if it can break out. It's, kind of teetering here. It's not one of the strongest momentum signals we have, but it's fairly actionable. So NXT is another one I would add to the list. So that's it. I think from our Quant Rockets list, there's lots more ideas on this list, but I've just filtered to a few of my favorites there. You should definitely check that out if you are swing trading momentum. We are constantly adding features, and because this does report earnings next week, I believe on Tuesday. Markets are closed on Monday. Netflix has been sort of uniquely punished because I know it's got its whole merger acquisition that we're trying to pull off here. So I haven't looked too closely at the details here. This is the weekly chart. I mean, if we looked at RSI, it's probably going to be one of the most oversold that it's been in quite some time. Yeah, you'd have to go back to basically COVID time or 2022. So it's pretty extended to the downside here. I do think there are some big levels back from, again, 25, right around 82 or so. So I wouldn't be surprised to see us kind of test or capitulate down into the low 80s here. Maybe earnings is an excuse, but this is going to kick off really technology. And then there's a handful of other companies obviously reporting earnings next week that you want to keep your eye on. So that is it for me. I think right now, NASDAQ 100 in a bit of a holding pattern. Small caps are working. The momentum stocks are hot, but they are probably getting later in their moves. So just be careful if you're jumping full bore on to some of those space stocks or quantum or any of those other things that have seen a big surge up. I think crypto has, another push behind it. It has cleared some big levels and ranges, but it does have a lot of prior bag holders up here, so you do need to be cautious. MSTR, I think, is interesting. Again, that 170 level, I posted about it as being a big level. We are holding above it, so that is constructive. They are ATMing quite a bit out of stretch, and so they are able to buy more Bitcoin. SATA also is, another kind of credit instrument where they are, I think, going to be leveraging an ATM to purchase more Bitcoin. So some of the treasury companies are starting to now be able to re-engage their flywheel to purchase more Bitcoin, which could, again, get us some of that oomph that we need to get back up into the maybe low 100s to test that area. And then I think it's a big wait and see. And then, of course, like we talked about, the Clarity Act. So there's lots of opportunity out there, but you do need to be on top of it. And so hopefully this video helps. And of course, we have our trading systems if you need more day-to-day updates. So that is it for me. Thanks for tuning in. Good to be back. Hope to be back consistently for the rest of this month. Have a great weekend and a long weekend. We'll see you back here next Friday. Take care.